Thanks to years of ultra low mortgage rates and easy money loose lending policies from non-bank lenders and too big to fail banks, home prices have now elevated beyond the 2008 housing bubble peak. And this is a good thing and a bad thing depending on your position. If you are selling your home looking to cash out, it could be a good thing. If you're someone looking to get into a home, it may not be such a good thing, as many millennial homeowners are now finding out. So a recent study here out of Mishtalk shows that over 2/3 of millennial homeowners regret their decision to buy a home. We're going to talk about the reasons behind that. Of course, high home prices is a big part of it, but there's much more to talk about beside that. But real quick, before we get started, please give us a subscribe if you haven't done it already. It's going to be over here to the right. It's going to be a red button. More reports here that people will be getting unsubscribed. So if you subscribe, you'll get our alerts to new videos. Also, we put every video we put out over on Twitter and Facebook, so check the description down below if you'd like to follow us over there. Okay, so let's get into it. This is an article out of Mishtalk. It's moneymaven.io. We're going to link to this, of course. Just also look down in the description for the link. And they give us a nice chart here of millennial homeowners. Now, 68% of these millennials regret buying a home. That is over 2/3. Now, when we look at the chart here, it shows you where millennials live. And we see that about 42% of millennials own their home. And that's actually been increasing here in the last year, year and a half. Now, over the past few years, as I mentioned, we've seen an increase in home ownership, meaning less investors buying and more owner-occupied purchases for homes being bought. And that may not be such a good thing, especially as home prices have continued to rise. Well, what happened after the financial crisis, if we look back here on a chart, we see that home ownership dropped a lot as millions of people lost their homes and a lot of investors came in. So therefore, you saw a lower home ownership rate than you did prior to the bursting of that housing bubble. So what's been happening over the last couple of years, home ownership is again rising because a lot of people are getting in at these high prices. And we know there's been a big push to get people into homes with ultra loose lending, which includes, again, subprime mortgages are back, right? Little to no down payment mortgages are here. They've changed the credit score criteria. The DTI ratios have been increased. We also have government-sponsored entities, Freddie Mac and Fannie Mae, basically backing about 1/2 of mortgages that are initiated in the United States. And knowing that it's backed by the unlimited debt machine known as the United States government and central bank, well, it incentivizes the bank to lend, when really if there were consequences to pay, they probably shouldn't be lending to a lot of these people. All right, so back to the chart here. 2/3 of millennials regret buying the home. Now, overall, only about 42% of millennials own their home. It was actually much less than that just a few years ago, but over the past couple years, there's been a bigger push to get homeowners into these homes with the looser lending. Is it good or is it bad? Well, 2/3 of millennials say not so good because they regret that decision. Now, why would this be something that these millennials regret? Home ownership, is it the American dream? Well, it can be, but if you buy at the wrong time in the wrong situation, it could be the American nightmare. So with high home prices, you're going to have other costs that are also going to be sky high, including home insurance. And a lot of millennials are not factoring these other expenses into their decision to buy a home. All right, first of all, we have 20% for maintenance, and that would be ongoing maintenance like the leaking roof, the trash compactor that stops and fails, right, and all the other things that can break down and need to be fixed in a home. But another 20% realize that there was pre-existing damage after moving in. So many of these buyers, they're so desperate to become a homeowner and realize the quote-unquote American dream. A lot of them are not doing their due diligence on purchasing the home. They're not getting inspections. They're not asking the right questions. Or maybe they're just turning a blind eye because their excitement of being a homeowner overrides the cautionary side. Okay, another 19% are realizing that the space does not work well. So with the high home prices, you have a lot of new buyers especially getting into the smallest home at the lowest price possible. So of course that puts people in condominiums and townhomes and attached homes in many places. And we know those can become very small and cramped with the lack of storage. If you're in an apartment or a condo, you're going to have an HOA that's going to restrict where you can store items. Sometimes they'll restrict how many cars you can have parked out front, so that's also a space issue that many of these millennials have reported. Right, another 19% said they wish they would have put down a bigger down payment because now the monthly payment is eating into their monthly expenses very heavily. So home ownership, yes, it can be the American dream, but think about the high insurance cost, based on the higher price or higher value of the home. And insurance costs necessarily don't rise because the home values are going up, but they rise because of home rebuilding costs. And a lot of home insurance companies are paying out medical payments for injuries and things that happen on someone's property. And medical costs are skyrocketing. So it's not just the value of the homes or the rebuilding costs or the cost of lumber, labor, and materials. It's also the rising medical cost. Insurance has now, in some cases, doubled in the last 10 and 12 years in some zip codes. Okay, add on top of that the maintenance. Also, in many places, especially attached homes like many first-time buyers are forced to get, have that monthly HOA fee. That can be anywhere from $100 up to $500, $600, $700 and beyond. And if you have a home, you might want to get some sort of alarm or security system. That's going to be another monthly cost. So unfortunately, many of these millennials could be some of the biggest losers in the next economic downturn, because it appears, based on their own answer to this survey, it appears many of them bought at the wrong time or in the wrong situation, and many of them look like they're in over their heads. And if all those factors were not enough with the high price of owning a home, you buy at a high price, you're also going to pay higher property taxes. Add that on top of everything else. We did a whole episode on property taxes, I think maybe 8 to 10 months ago. We talked about some of the states that have the highest property tax, including New Jersey and Illinois. And in some cases, you have many people, especially in these higher tax states, even though they bought the lowest price entry-level home, they're paying sometimes $2,000, $3,000, $4,000 a year just in taxes. So can buying a home be a good investment? Absolutely. Some people don't look at it as an investment, but some people do. Right? So people that bought between 2010 and 2012, especially in areas where home prices took a big dive, well, they found themselves now with equity. In some cases, the home price doubled and tripled, and maybe they were not meant to be an investor, or they didn't buy it as an investment. But if they turn around to go sell it now, they've got massive equity with the home prices that doubled in some cases. Right? Other people say no, it should not be looked at as an investment. Right? It's just a place to live. But if you have the right mindset, if you have an investor mindset, everything that you spend time, money, or energy on is an investment. Your time is an investment. Or I'll give you an example. If you spend 60 minutes to list something on eBay, let's say it's 3 shirts, and you end up selling 3 shirts for $12, and the shipping is going to eat up 6 of those dollars, and the eBay fees another $2 or $3, you might have only made $2 in the end, and you've spent 60 minutes of your time listing it, going to the post office and mailing it, packaging it, weighing it. So you spent 60 minutes of your time to make $2 in the end. That's not a good use or good investment of your time. And I'm sure there were many other things that you could have made more than $2 on with that 60 minutes. You might have been able to look for bottles and cans on the side of the road and make more than $2. So I think everything, including home ownership and even vehicles, should be looked at as an investment. Right? Think about someone that buys a vehicle at a car auction for $1,000, turns around and sells it for $3,000. So instead of flipping a home, they're flipping a car. That is an investment. More people need to look at the home as an investment. And then I think they'll be more diligent about these carrying costs, right? The cost of maintenance, other expenses, things that are not taught in school. Unfortunately, our schools are very lacking as far as knowledge of the economy or even money, how to balance their individual budgets, right? Things that people should look out for in life, including buying a home, which most people want to do eventually at some point during their life. And add on top all the cost of maintenance and owning a home, a lot of these millennials are carrying big amounts of student loan debt. And because so many people, or so many millennials rather, overextended themselves into buying a home, in some cases taking from their 401k or borrowing from relatives to have enough for a down payment on a house, many of them are now living paycheck to paycheck, only to discover that prices are rising elsewhere also. Okay, another recent report here. This is out of MarketWatch. Millennials are resorting to this questionable tactic to buy their first home. Another thing that's also happening quite a lot with these millennials is that they're finding they want to move after just a few years after buying the home, but now they're stuck into a 30-year fixed mortgage. And now that home prices are not going up as fast as they used to, and in some places they've stagnated and stalled and even dropped, if they turn around to sell the home, when you factor in all the costs, including the 3% fee that they need to pay to a real estate agent, a lot of them are finding themselves on the losing end and with not much equity to absorb those costs of relocating and selling the home. So it's best to get into a home that if you had to move or relocate, you'll be able to rent it out for enough to cover the cost of the mortgage and all the monthly upkeep and maintenance and expenses, right? And I recommend about a 20% cushion on that, right? So for example, if you buy a home and your monthly mortgage is $800, including all the carrying costs, you should be able to rent out that home for $1,000. So you have that extra 20% cushion for unforeseen expenses like maintenance, right? Maybe deductibles that you'll have to pay if there's an insurance claim, right? Cleanup and other unexpected expenses that come along the way. But see, that's not happening. A lot of people now are paying more for a home and their monthly payment's higher than what they can rent the home out for. So if they have an emergency or have to move, go out of state for a job, or relocate to help a relative that's sick, anything like that, many of these people are finding themselves not able to rent the house to anyone that's going to pay enough to cover the cost of the mortgage and the maintenance. And that can cause some very big issues if the home doesn't have enough equity to sell it and gain a profit, or if you have to rent it out to cover the cost. Right? So I'd like to hear your comments on this. What do you think about this? Is this going to end badly for these millennials when the downturn eventually does get here? And yes, there will be a downturn. I think they're going to try to, in fact, I know they're going to try to keep rates lower, which is going to bring mortgage rates down with it, right? Unless the central bank quits meddling in the treasury market, and then you might see a bigger disconnect between the actual Fed funds rate and the mortgage rate. We'll have to wait and see. I think they're going to keep meddling in the market, try to keep the mortgage rates down until at least the fall of 2020. All right, that's just what I'm seeing here from the outside. I don't work for the Fed, so I don't know exactly what the plans are. But thanks for watching this update here. Please give us a thumbs up if you like what we talked about, and leave a comment down there with what you think. Maybe you're a millennial homeowner. What are you seeing? What are you feeling? Do you, at the end of the month when all the bills are paid, are you pretty close to being maxed out? Have you had to maybe move and rent the home out and you're covering your expenses with the rental income? I'd like to hear your story, or just even your opinion on it, no matter who you are. Thanks for watching. We hope you are staying above water out there, and hope you're aware and prepared with the economic situation we're in. Bye for now.